All righty. Good morning. Make sure I'm up and running here. Hey, I'm up and running. And echoing. There we go. Echo gone. Echo is gone. All right. Well, good morning, everybody. Happy Tuesday morning. It's going to be a wonderful day. It is CPI day. We got CPI inflation reporting coming out here in 1 hour. So, yeah, let's dig into some setups here in a minute and see what we got, see what we can come up with today. As always, anytime we have an inflation report coming out, as with most every other red folder event, it's just a good idea to stay safe, sit on your hands perhaps, that 5-10 minutes before, 5-10 minutes after, at minimum, just to let the volatility kind of blow over, the storm, so to speak, the flash flood, okay? So that'll be coming up soon. Let me get my chart shared. We'll go into the economic calendar. Let me see here. I want to go and select just like I did yesterday. Actually, before I do that, let me just make sure I don't have anything open important. All right, let's get this window over here shared like this. And there we go. All right, we are rolling. We are up and rolling. I just want to get one window open over here just to make sure. Let's see here. Select that. Come on. No, I don't want to log out of that. There we go. That's what I was trying to do. Let's see here. I want to click on that. All right, we are up and running. All right. Well, again, happy Tuesday, everybody. I've got everything up and running. I still have a trade open. Got Aussie dollar. So Aussie dollar, US dollar is up and running. So it's getting a little bit lazy on me, but I am, with being in trades for me anywhere from 1 to 4 days, 2 to 4 days. I'm not looking for those big fast moves, just looking for those slow and steady moves. So Aussie dollar, yeah, that's currently the only trade I've got open. Let me see over here. It looks like we did lose it off of the top setups. So this was on here for at least the last week or so, but yeah, it's down to neutral. So let's see where Aussie dollar actually is at the moment. Aussie dollar. Okay, so it's a neutral 3. So it is still on the positive side. Okay, so it's being helped by a little bit of eco scoring. That'd be the fundamental analysis, a point of the sentiment score, and not really a ton of help at the moment on the technical side of things. So referring to moving average crossovers, that sort of thing. But nevertheless, I'm in it. So just because it's down to neutral, does that mean I close out the trade? Well, no, not necessarily. Because I'm, at the end of the day, it bounced off of a demand zone I was following, a demand zone I was tracking. Excuse me. So anyway, I ended up buying. Oh, this is EuroCAD. I need to go to Aussie dollar tiger. Let's go find Aussie dollar. Here we go. All right, here's my setup. So just to kind of go from the start, we were looking at a 4-hour demand zone, okay, on this Aussie dollar. This big fat indecision candle right here, okay. This doji candle with some big old wicks. This was really my starting point because we had this big move out, this big expanded range candle outward, and then it just continued from there and broke some structures over here to the left. So this was really the start. This was what I was looking for as a retracement. So again, 4-hour, and then when I step it down to the 1-hour chart, okay, just a refresher, we had this, big wick candle over here. This candle has the big wick energy, right? So there you go. That was the confluence I was looking at to get into this trade, this 1-hour candle here. The sellers jumped in, but then the buyers just slammed the door shut back to the upside on this candle. Okay. And then you had some volume spread analysis pick up thereafter. And even on a 1 hour time frame, you were able to break a candle here within that first couple hours. So really strong rejection. And this was the basis for my trade. Now you guys see I've got a white line on there, a white trend line. The other thing I liked about this trade, not only did we start down here, we touched here, okay, where that demand zone was created. But what else I liked about this trade is when price came back and closed below this white line, this is where you had short sellers start stepping in. Okay. To what I feel like and what I hope would be a little bit of a bear trap. Okay. I mean, that's a breakout trade, is it not? Okay. All these traders in here, the ones that shorted this market. So the way I see this, and the reason I'm putting money on this trade is because I feel like this would turn into liquidity for the big banks, the big boys. Okay. The big banks need to buy this area as far as unfilled orders. And then even in this area here, if we zoom in a little bit, okay, there's going to be some liquidity and just from this as well. The traders that bought this market, they're going to be putting their liquidity, their stop losses below. So it's just it's sell orders to feed into the hands of the big banks to fill their buy orders. So it's not anything that I necessarily look to happen ASAP, but just more of a gradual move, maybe like an accumulation move. Okay, that's what I'm looking for here. So obviously get my order in for the 4 hour, 1 hour confluence, but then also hopefully jump on the side of the big banks to carry this thing up. Again, and that was all because I had a positive 5 or higher score over here on the Edge Finder. So that was the basis of my trade. Now let me put on the neutral real quick because I want to see, I just want to double check. Okay, so yeah, and just to kind of recap, okay, we had some good seasonality for the Aussie dollar. Let's do this actually. Let's go to the majors real quick, just so I can see it easier. Okay, now again, we've lost a point or so of strength on this, a couple points actually, because it is down to a +3. Again, when I got in this trade, it was at I think a +6, so it was giving me that good fundamental sentiment analysis reason to buy. So I'm going to stick with it because I still like the technicals that we just kind of went through, as far as potential bear trap, bear shorts. Okay, going to get potentially liquidated out, and it worked out great initially. Okay, so the 1 hour is where I got in. If we go back to a 1 hour. We ended up breaking some structures to the upside. Okay. Now, I knew that when we got into this 4 hour supply zone, we were probably going to have a few hiccups. Okay. That's a given because that was a fairly decent supply zone there to the downside. Now, it didn't break any structures. So I do like that. I do like that it was not even strong enough to break some of these structures. So that just leads me to believe that when we bounce into this 4 hour supply zone, that red rectangle there, that we will get a bounce down. And I drew this up. Actually, I drew this up the other day. I drew it up yesterday. So this is exactly what I mapped out. This green projection line. Okay. Yesterday we were in this candle, this blue candle. This is a 4 hour time frame. So in this blue hour, and this, let's just step it down to a 1 hour actually. 6 right here. So I drew it up on a 4 hour, but this is what I expected. Look, jump into the supply zone and get a rejection. And that's exactly what we've gotten. Now I drew up this 1 hour demand zone like this as an expectation, just like the green line suggests there, that if we come down to this demand zone, we should hopefully use that to help push our trade back in our direction to the upside. Okay. Again, because I'm not too awful worried about this supply zone just blowing through my stop loss. Now, again, it came down and tagged into the 1 hour, which was why I got into this trade to begin with in this area. And this was on Friday. So remember, I carried this trade over the weekend. But yeah, so far it's playing out exactly as planned. Bounced up, run into that 4-hour supply zone. It should give me a rejection, but then I would expect that somewhere in this area, preferably the 1-hour demand zone, that it'll catch a bid again and push it to the upside. So yeah, nothing to do but continue to sit on my hands with this trade. Just let it do its thing. For me, it's all about keeping the patience and just letting the trade work itself out. Okay, there's nothing I can do. I don't want to micromanage it. I don't want to close it out too early. I will say I have already pulled my stop loss from originally below the 1 hour, 4-hour confluence. I originally had it down here, and now I've got it up here, as you see. Okay, so I moved it from down here to right here. So again, now I'm keeping my stop loss below this green demand zone. So I've already locked in gains on this trade. In other words, I can't lose money on it. Okay, because I bought down in this area. Okay. So yeah, we'll just let it play out. Worst case scenario, it comes back, it tags me out for a small gainer. Yeah, I think it's only at about a 0.5%, a 0.5 to 1 reward risk right now. So it's not like it's a ton of money, but the important thing is I've conserved my capital. Okay, because I have a lot of break-even trades. I have a lot of 1-to-1s. I have the occasional loser. And all I care about, where I like to make my money, is the runners. So if I can get a runner, if I can get a bounce off this demand zone and push it back up, finish pushing through the rest of this overhead supply zone, well, then we got a little bit more runway going, because then we'd have established higher highs and higher lows again on this 1 hour. So really, this is the key, is just break this area up here and close, because that would then give me a double bottom, okay, equal lows, and then I'd have a higher high on my hands, which I already have, and then now I'm just looking for that higher low. So we'll just let it do its thing. So that's really about all there is to be said about the Aussie dollar trade I'm in. Just going to let it do its thing and see what we come up with, because at this point it's in the hands of the technicals. Okay, it's not in the hands of the fundamentals, because again, I'm only getting a +3 now. So anyway, Xander, what's up? What's going on, brother? Nice to see you. How's your trading going? How's everything else going? Let me know. Let me know. I decided to ignore my green screen for the day. I've got my lava lamp, as you can see, back here in the background. If it's green, I'm green. If it's red, I'm in the red. Okay, so it's in the green today. We're going to leave it there. Okay, that's a good thing. Green is good. If you see red, just means I'm in drawdown. But hopefully you guys will see a lot of green, and I'm getting hot already. I'm going to pull off my jacket. Algo, what's going on, you guys? Missed you guys yesterday. Happy Tuesday. Today is CPI day. Let's take a look over here. Okay, 7:30 my time, so 45 minutes from now. Do you have, yep, no trade. Xander says he's been sitting on his hands. Nice trade with the gold push yesterday, so I could just chill the rest of the week. Hey, when you get that early week winner, that early week profit, it makes for a good rest of the week, a stress-free rest of the week, right? Anytime you can lock in that winner right up front. So good stuff. That is good to hear. Now it's just about, depending on your trading strategy. If you're not interested in doing a whole lot more trades this week, hey, these are the best times ever to do some back testing, or read a book or something like that, if you're not necessarily wanting to get back into the market. So good stuff. It's going to be a good week regardless then. Guys, so I've got this stream until 8 my time. At 8:30, so 30 minutes after I end, I'll actually be hopping on. Excuse me. I'm actually going to be hopping on to my buddy Trader Nick's YouTube stream. So I just want to point this out at the outset here before I get too deep into my goodies. Let's see here. Where you at, Trader Nick? Trader Nick, Trader. Oh, right there, right in front of me. Just wanted to let you know I'm gonna be hopping onto this guy's live stream. This guy is the one that developed and wrote and created A1 Trading, who is the same company that created the Edge Finder. Okay. So I just wanted to let you guys know that if you wanted to hop on to Trader Nick over here, it's at Trader Nick. Again, this is 30 minutes after I end my stream. And then you can just click onto his live stream over here. And that'll be my first guest appearance. Moving up in the world. So anyway, good stuff. Yeah, really cool guy. This dude trades very similar to the way I do. So that's one reason I've been following him for years now. And one reason why I jumped on the Edge Finder for my fundamental and sentiment analysis. And then I've even got something now called a stock box that I just got a couple months ago, I think it was. So this is for stock trading. So this may be something I maybe add into the program at some point. Just depending on, if I can grow the channel and get some interest in it. So anyway, good stuff. That's again 30 minutes after I finish at 8:00 a.m. Central Standard Time, where I'm at here in the Kansas City. So, and it's 6:47 my time as we speak, just so you know. But yeah, good stuff. Top setups though. Let's go get everything else back on over here. All my other goodies. Okay. And let's get rid of the neutrals because I only care about actionable items, actionable setups. What's at the top of the list? Silver. Is it a surprise? No, not really. Silver and gold. Gold's at a +5 down here, so it's hanging on for dear life. But silver leading the way in a three-way tie with some outliers, some outcasts, some items that I don't see on the bullish side way too often. And that's the New Zealand Swiss, for one. That's one that I just almost this thing camps out in neutral territory so often I'll almost forget about it. New Zealand Swiss, and then really kind of the same thing for the Euro Swiss. So we'll take a look at all these pairs. I've only got one US index on, and that's the Dow. And then I got some Canada short pairs, which means buying the base currency. So Euro CAD longs, New Zealand CAD longs. And then only one short idea. That's the pound Aussie. One thing I want to look at real quick is the put to call ratio, just to get an understanding of where the options market's at. So let me actually flip on over here to oh my goodness. Yeah, they moved a lot of this stuff around. So I need to go find, crowd sentiment, put to call ratio. Those itches this morning. Hey, this measures the actual trading activity in the options market. So if I got the Dow on there as a bullish signal, I want to go see if they're high volume on the call side or the put side. And as you can see, this blue line, if you have this white line down at or below this blue line, that's a high call volume. So that essentially means the options market is heavy on the long side. And then the reverse would be true up here. This is high put volume, meaning they've got high bearish bets on. So as you can see, the white line's down here towards the bottom. That means there's a little more higher call volume than there is put volume. And that just simply translates into bullish bets, right? So this is a contrarian signal. Oh, you guys, I just realized my picture's in your way. Let me get this, let me figure out how to get my picture out of the way. I guess I can't move the picture. Is that right? How do I move the picture down here? I'm trying to move my picture so you can see where the white line is. Let me look at something real quick here. 1 second. Cancel. Is it stationary? I guess my ugly mug picture is stationary and I can't move it. How do I move that? Default overlay. Maybe I don't have a way to move it. I'm sure there's a way to move it. I just don't know how to do it. Sorry, guys. Yeah, behind my picture is the line I was telling you. But the important thing is you guys can see the top of this white line right. Well, I guess I'd have to do it over here. Right here. Okay. So, I mean, as you can see, I mean, that's clearly closer to the high call volume than it is the put volume. So again, this just basically means options market a little, they lean a lot heavier towards the bullish side. So again, I'd be wanting to look at that as a contrarian signal, if anything. So it's not really jiving with this Dow long, but that's again just one piece of the puzzle, if that makes sense. To think people expect silver to reach around 300 by the end of the year. Whew, woo-hoo. It's probably the same people out, Xander, that was telling us Bitcoin's going to 1 million, right? But hey, when you got this geopolitical nonsense going on, I mean, I think it's overboard. I agree. I'm in your camp, but I see why they're saying that. You know, all this drama, and now you got the president that's threatening to put a lawsuit on Fed Chair Powell. Okay, I mean, as soon as that came out, you had a lot of it's like stirred up a hornet's nest in some of these assets. So, yeah, you know what? At the end of the day, let them make their projections, because all we care about, or all I care about, and hopefully you guys too, all we should care about is price action. Because ultimately, as far as making money on our end, all that matters is the charts and the fundamentals and the sentiment. Remember, that's all noise. That's all. Whenever they say silver's going to 300, Bitcoin's going to 1 million, X assets going to 0, is that an absolute fact? Is that hard data, or is that just somebody's opinion? And we all know opinions are like assholes, right? So I don't worry too much about it. I really don't. All I care about is all the items that's on this hedge finder, meaning the fundamentals and the sentiment. Okay. This is all that matters. Sentiment analysis, fundamental analysis. This is it. Now, obviously, whenever Trump drops in and picks up Maduro, whenever we've got Iran in crisis right now, because I know they've got an ugly massacre going on over there. It's pretty hideous. Things like that obviously will stir up a hornet's nest with certain things, especially oil and things of that nature. So it's just something to be aware of. One thing I've noticed about all these big, ugly, news releases, geopolitical releases, is it seems to me like they stir up a hornet's nest in the markets for a day or two, right? that initial release of whatever that ugly report is, and then you have everybody freak out for about 24 hours, and then afterwards people forget about it in the markets. Right? It's not like it's a sustained move, because the world is full of good and bad news. So nobody can keep up with everything at once. So yeah, you're going to get an initial from what I've seen in the charts anyway. I may be wrong, but from what I've seen, it seems like you have that big reaction in a lot of these things, only for it to blow over, and then people forget about it on the markets, in the market side. So that's why I don't even give a crap. In the grand scheme of things, I don't. But what I do give a crap about is something that doesn't change, and that's the data. That's the hard data. That's the fundament and the sentiment data. Right? So yeah, that's just a little bit about where I sit. I care about things in the world, but in the grand scheme of things, when it comes to my trading, our trading, a lot of it doesn't affect us. It really doesn't. Imagine wanting to sue the president of the Fed. Yeah. Hey, best reality TV show ever, I think, is politics, especially U.S. politics. That's what I say to everybody, right? I mean, I have my opinions, but I'm not one of those people that get out there and says them, because there's no sense in stirring up a hornet's nest when all you can do is just sit back and watch the shit show. greatest reality TV show ever. I just like how the push is higher has been reducing in points. That says a lot. Sorry, Xander, I can't quite make out what you're trying to say there. I just like how the push is higher as, yeah, if you can elaborate on that. If you could, sir. But yeah, look, as far as the put to call ratio, again, the Dow is, if anything, closer to shorting territory for me. Let's see here. What about the NASDAQ? Okay. NASDAQ is a little bit higher, but still kind of neutral. So I'm not really getting any help bullish or bearish from the put to call ratio. What about S&P? Aha, look at here. S&P. This is what I like to see. Okay. If we're on an extended uptrend, when you're going back to weekly and monthly time frames, this is what I like to see if I'm going to try to buy something. S&P is closest to the put volume, the high put volume, meaning most traders, average traders in the options market have bearish bets on. If they've got bearish bets, that means they've got stop losses overhead. What are stop losses? Stop losses are buy orders. Okay. So I would look at that as a contrarian signal and say, if anything, I want to buy it. What else we got? Gold. Let's take a look at gold and silver. Speaking of silver, Xander. So gold right now is a little bit on the bearish side. You can't see it because of my picture, and I still don't know. I don't understand why I can't move my picture. That makes no damn sense to me. Anyway, the put to call ratio for gold is in the high call volume. So there are a lot of bullish bets going on in gold, and that's obvious. I don't know if you guys have seen that. There's a lot of places where they have lines out the doors where people are literally going in to buy gold and silver bars, bullion, everything, just to load up. Well, guess what they're doing? Are they doing it at all-time highs? Yeah, absolutely they are. So yeah, I agree. I could definitely see the metals going higher, but what are they going to do when we get a big healthy pullback and they lose half the value of their gold and silver bullion bars that they probably emptied out their savings account to get? So interesting stuff. But anyway, just to put a bow on that, gold is really giving me a bearish bias, if anything. As far as silver, that's going to $300, Xander. It's the same thing. It's a little bit on the high call volume, and I say that jokingly. You measure how much gold is pushed into new higher highs before dropping back. The pushes has been reduced in size. And yeah, no, you're exactly, yeah. Let's go. I see what you're saying. Let's see here. So yeah, let's just get rid of my drawings for a second. Yeah, let's take a look at that from a higher time frame. Yeah, I mean, this was just parabolic, right? And then we just started getting lazy back in the end of the month, the end of December. Okay. Just been going sideways. Now we've kind of finally peaked through. Yeah, I mean, I would think we'd get some type of a healthy pullback at some point. Take a look at a weekly. I don't know. That's been still pretty parabolic when you're looking at the higher time frames. Yeah, I mean, I need a pullback. I got to be honest. That's just too crazy. Okay, I have an alert that I even think is aggressive up here. Okay, as far as silver goes, anyway. So we're looking $80.19. I was basically looking at this 4-hour demand candle here, but the reality is, if I step it down to some smaller time frames, really, I kind of hit a patch of no volume in here. So it gapped up on our Sunday open, but just didn't really have a lot of gusto, a lot of volume. So I'm going to monitor that area, but I think I'm more interested in this area down here. If we can get a decline down to the $78, $79 level, because if you can see down here, those yellow bars, we had a lot of volume there. We had a lot of trading activity taking place on Friday's session overlap, London, New York overlap. So this is my main area of interest for silver. And also we had a gap. I believe that was on a 4-hour time frame. Yeah. So we got this gap right here. And this gap is the lowest, the closest gap to the origin of this overall strong move up, because everything else in here overlaps. All these other candles and wicks overlap. So I don't really see an efficiency there. I love this area because of the fact that we've already bounced off of a former daily demand. I really like that. But yeah, I agree. It's got to breathe, Xander, at some point, you would think. Right? So again, I personally don't have a whole lot of interest in getting aggressive up at the top part of this. Now you see, I did draw up a demand zone or two up here. So what time frame did I do that on? I think it might have been a 15 or a 5, 15. So I am watching these two demand zones here, because even in this little bit of a time frame, we had some pretty decent volume spikes. And this was after this was Sunday, so this would have been the early part of Asia session on the market open this week. We had some pretty good volume taking place here. So I can't really flat out ignore these areas. I mean, they both produced, well, if we look at this zone here, this one for sure produced a nice little gap on us. This one here, I drew it up. Let me zoom in. Yeah, see on this one, I'm not as excited about this one because the leg out candle, I mean, look at that. That's the smallest of gaps, is it not? See, that's almost laughable to even draw up. Now, the only reason I really drew this up is because it was the former all-time high. If I scroll out to the left, right? Only speculate and hope. That's right. Yeah. Hey, I'm a cheap ass. I want to buy stuff that's on discount. I want to buy crab legs half off. I don't want to pay premium. So I'm right there with you. Give me these discounts, and then I'll be more excited about that bullish signal on silver. But again, I personally am going to keep an eye on this higher demand zone I just got through shit talking, because it did go right through the former all-time high, which was just last Tuesday. So, in fact, I need to move my alert up just so that I can make sure and know if and when it gets hit. Okay, so there's my alert on silver. It's got to be a bullish engulfing candle if we hit the zone. It's got to break a structure to the upside after hitting the zone. If it doesn't do those things, I'm going to ignore it and let it go. Maybe we get that reaction in this demand zone. If we don't get in either one of those demand zones, then I would be more interested in waiting for the better discount anyway. Because I do like my demand zones down here a lot better because they're cheaper, number one. Number two, closer to the origin of the strong move up. And remember, on the 4-hour time frame, there's no gaps down here. Now, there's going to be gaps on some of these smaller time frames, but I'm more interested in the 4-hour. See, like you got a gap down here at the very bottom on a 1-hour. So, basically the way I would look at it is this: take a small stab at it here, confirmation entry, and then if it goes through that zone and does not give me a trigger, well, then I've got about the closest thing I've got to a limit order down here on a 1-hour. Okay. Now, I would still probably make it prove itself just because metals are ridiculously priced right now. But yeah, that's about it. I'm just going to ignore it for now. Let it do its thing. I don't really want to get involved in any smaller time frames up in this area. I'm back to the 4-hour time frame now. But again, we'll just see what happens. We'll see what happens if we come down here. Now, this was another all-time high over here. So just for kicks, let's step it down to a 15. Okay. So see, this was another former previous high. And yeah, you do have a gap here. You do have a demand zone here. But the problem is, did it break a structure yet? No. Not excited about it. I would prefer that it broke this whole thing, not just these little structures here. I would have preferred that this zone break this swing, break these highs. So it didn't do that. Therefore, I'm more interested in just waiting. All right, that was silver. Starting to think I should let it go. Yeah. I mean, I definitely wouldn't be buying it. But if you've got it, well, you said you bought it a year ago. Well, if you bought it a year ago, you're doing pretty well. Let's take a look at a 12-month calendar. How about it? There you go. If you bought it last year, I don't know how long ago you bought it, but there's your 2025 candle right there. That's pretty sexy, isn't it? So hopefully you bought that at the beginning of the year. As if so, that's one hell of an investment right there. Oh, I'm sorry. Wait, you said silver or gold? Oh, you said silver. I was on the gold chart. Well, the silver looks even better. Ah, there's Beetlejuice. Zagnuts. It's been a while since I totally forgot I had those pictures up there. But yeah, your silver looks even better from open to close. If you include the range, 190% at one point, and now it's captured the wick. Silver, man, it's just going crazy. I mean, that's just absolutely bonkers. Silver, and then again, gold was just as crazy. What was gold? What was gold's close? 65%, still strong, freaking way strong. It had a range at one point of 75%, and again, it's captured the range that it left. So, yeah. But that's the thing. This is where you see a lot of people lined up at jewelry shops and discount gold bullion reserves. I wonder how many of them are actually fake, trying to buy gold, buy silver. Is that not the most ridiculous thing ever when everybody's buying at all-time highs? Okay. I mean, if you're doing a trade, that's fine. But if you're buying it in bulk, what's going to happen if and when this thing crashes 20, 30, 50%, right? Not saying it's going to, because I'd rather think it's going to keep going. But what goes up must come down. The laws of physics apply to trading as well. So anyway, that's enough about gold, silver. Let's take a look at some more setups here. So let's take a look. We got New Zealand Swiss, and then we've got New Zealand dollar. I want to see what these New Zealand pairs are up here for. Okay, and then there's New Zealand yen, there's New Zealand CAD. Let's take a look at the New Zealand economic data real quick. Or I'm sorry, the economic heat map. Well, before we do that, let's actually look at the surprise meter. So this is all 8 major currencies showing their strength. Come on. Let me refresh it. Refresh. Okay, here we go. So pretty much everything remains pretty much the same as yesterday. The 3 strongest currencies are Canada dollar, euro, and then Japanese yen, because they have exceeded expectations on 67% of their high impact events. And then the British pound is still trailing the way at 0%. And then the Swissy is not far behind it. I do think that Governor, I was thinking their governor over in Great Britain had a speech. What day was that? Somewhere in here. I know I saw Governor Barkin, I think it was, or somebody. Where the hell was that at? GBP. Ramsden. It's not that one. Somewhere on here. I don't know. I'll have to find a readout of it. I could have sworn oh, there we go. Governor Bailey. So he speaks Friday. Okay. So it's going to be interesting to hear what he has to say about all of this right here. Look at this. Ugly reports. 0%. Not a single report exceeded expectations. Hey, that's not the greatest thing to be seeing. That's ugly. That's hideous. So, yeah, of course, their last reporting was a week ago for their services PMI. They missed. Now, that number, in all fairness, is still in expansionary territory as far as their PMI data goes. But it just went backwards. Previous number on the services sector was 52.1 down to 51.4. On the manufacturing sector, 51.2 down to 50.6. So yeah, it's still in bullish, or it's still in expansionary territory, but it's just, it's flirting with the 50. Remember, anything in the PMI data that's 50 or higher is expansionary, and anytime you get under 50, that's where it gets a little more contractionary, contractory, however you say that. Contractory. You guys let me know how that's said. But yeah, it's just not been good. Okay. Their data, it's not been good at all. Now the Swissy, again, it's not far behind. Okay. They had 3 readings last week. That's your orange font over here. That's anything that's released within the last 7 days. But yeah, they had bearish services sector PMI, CPI, and their unemployment rate. just not good. They've had one bullish report, and that was a month ago. Okay, and that was for their PPI, the year-over-year number. But that's it. Neutral number. This is one that the economists actually got right. CPI. Okay. Remember, economists are like weatherman. They get the weather wrong all the time. In this case, they get the forecast wrong all the time. That's why you always see blue or red and not as many neutral readings. Neutral means they actually did their job correctly. Okay. So anyway, not that great. Again, just to go back over the dollar, a lot of data last week, a lot of jobs numbers. Half of them were hot, half of them were cool. But overall, yeah, jobs numbers just ain't looking that great. Okay. Thankfully, we've had a really good GDP number a couple weeks ago to kind of just kind of distract everybody for a minute. But jobs numbers, not looking good. Not looking good at all. But yeah, today we do get the CPI number. The forecast is also, I do believe, 2.7% today. We'll go back up to that. Where am I at? Tuesday. Yeah, 2.7. So we'll see what that reading comes out. And we're only 15 minutes away, by the way. 18 minutes away. So when this report comes out, just for kicks, we'll just flip it on to $1 yen on a 1 minute time frame just to see what the reaction looks like as that number is released. Also, I'm going to be interested to see. Let's see here. Oh, I need to go look at one report. So I want to look and see what the previous reading was on the CPI, inflation, CPI. Okay, so the previous number, oh yeah, that's right. The previous number was 2.7% as well. Now the previous number was 2.7% despite a forecast of 3.1. So for the currency, that wasn't a good look. For the stock market, that was a pretty decent look. Okay, 0.4 miss. 0.4 miss. CPI going to be crazy. Yeah, we'll see. I mean, the last three reports, they've forecasted higher than the actual number. And it was a big miss the last time. Now, again, that's a miss for the currency, but obviously that's better for all of our wallets here in the States by missing by 0.4% like that. Okay? A little bit cheaper. Let's throw this thing out to a multi-year. Okay, the big picture of inflation has been fairly decent. This is and again, guys, I just wished I could get my dang screen to come up a little higher. But obviously, way back here in the coronavirus era, okay, when we had CPI up to 9%, whatever it was, ever since then, it's just dropped. Oh yeah, I guess I can scroll up. There we go. So there you go, guys. It got all the way down to the 3% number back in August of 2023. So within a few months, it went from 9% down to 3%. It's just been kind of going sideways ever since. I guess you could squint your eyes, look at it sideways, and say it's just barely been creeping downwards. Okay. But that's obviously the target's 2%. So we're not too far away from it. We've just been doing nothing but flirting with that 2% line hardcore, just trying to ever so slightly get just a little bit closer. Now that report last week was last month was a pretty good potential step in towards getting to that 2% line. So we'll see what today brings. Again, that's only 15 minutes from now. This is a very exciting report. I can't wait to see it. I'm looking very forward to it. What else we want to take a look at? NASDAQ. Let's go take a look at NASDAQ and Dow on a chart. I wanted to look at that real quick before this report comes out. So NASDAQ, okay, here's my 4 hour. I'm going to turn my drawings back on. So I do have an alert down here at the origin of this strong move up, smaller time frame. It is also a former resistance. Okay, 1, 2, 3, 4, 5, 6, 7. This line's been touched a lot of times. So again, I only care about resistance and support lines. I only care about those lines to see where the retail liquidity is going to be giving the banks their money. Okay, it's a cutthroat world, and that's that's a kind of a morbid way of saying it, but that's the reality. Because whenever prices return to support resistance lines, what happens? You get a big population of retail traders buying or selling that area. So if we get price come down ultimately to this, former support resistance level, well, this is where you're going to get buyers to the long side. If we break that line and go below, you're going to get short sellers. So sell stop orders. Okay, so limit buys, sell stops all around this area. Creates nothing but a big patch of liquidity above it and below it. So I would like to see price come down a little deeper into this demand zone, because this is where the sell stop orders are going to get triggered. Okay, that's where the sell stop orders are going to get triggered from retail traders when we break that line to the downside. Sell stops. Okay. Or what I would see would be again a bear trap. I don't really dig too deep into the fancy terminology, but yeah, traps for shorts. Suck in them shorts and smoke them fools, right? Right into a demand zone of unfilled orders. This candle over here, a lot of trading volume. Okay, remember this demand zone over here. Okay, it had the strength eventually. It could have been quicker. I got to be honest. Okay, it's not like it just went straight up and broke this structure right away. It did take 3 days to do it. So that's, I guess, -1 in my book. So all that means, limit order down here. There's no limit long for me. It's a confirmation entry. Confirmation entries, guys, solve a lot of things. A lot of things. Just by simply getting, okay, just by simply getting that move in, that break of structure. So breaking this lower high to form a higher high, right? And then get a retracement to a newly formed demand zone on this impulse leg. Okay, that solves a lot of issues right there. And then, of course, again, it's got to create a new demand zone, or maybe just get a pullback, a 61.8 pullback. I mean, I've done that before. Okay? Let me go back into that zone, that drawing. I've done that before. Okay, I ultimately like to see a newly formed demand zone on this leg, but if I don't get a great demand zone, perhaps I'll just use a fib. Okay? I don't use it too often, but sometimes if I really like a zone, then there you go. Right? And then you can go for a pullback to the 61.8 or the kill zone, which is the 71 to 88%. My face cam, what do we got? Oh, let's get my chart back up for you guys. Sorry about that. It was actually yesterday. I don't think it failed on me one time. Let me see if that comes. There we go. So there you go, guys. This is what I was talking about. Confirmation entries solve a lot of problems. It takes out a lot of losses, and it gives you a few more winners. So yeah. But again, just to get rid of the fibs, this guys, if I don't have tattoos, but if I were to get a tattoo, this is what it would be of. Okay. Break a structure, retracement to demand zone. How nerdy does that sound? A buddy of mine has a trading style that he has, and I've told him the same thing because he draws it up every day when we were on stream. And I said, man, you need that tattooed on your face, on your arm or something. So this would be the equivalence for me. I don't know, maybe invert it and make it one piece or something. That'd be funny. But anyway, 10 minutes before CPI is released. So just wanting to remember that. Now, when it comes to this NASDAQ trade, guys, I was looking and mapping out what time frame was this? 30, 15. Was it a 15-minute demand zone? Let me look here. I was watching that for a while as a potential buy. Here's what I did not like. If I measure from the proximal line of that would-be demand zone to the distal line, That's 142 points. But if I measure from the proximal line to the top of this recent move, 7, 14, 21, 28, that's not even a 2-to-1 reward risk. So because of that, because remember, I like 3-to-1s. When I have a demand zone or a supply zone form, I need price to move at least 3 units of the range of that zone away for me to consider that a strong zone. And as you can see, it just didn't do that. But just because it didn't meet my rules, meet my criteria, did not mean it wasn't going to work out. And sure enough, it did, right? Now, I also drew up a smaller time frame. So I could have used that, but I just honestly wasn't excited about it just because the initial move didn't go 3 units away. That's just my personal taste. So anyway, so yeah, that's old news at this point. So it's time to move on. So yeah, for NASDAQ, again, we do have this alert further down here. That would be the play. Up here is just too expensive. It's too choppy. And we're pretty close to an overhead supply zone, a 4-hour daily confluence. So just not interested at all at that, at anything in this area. So yeah, that's that. S&P, just to finish out the indices real quick, broke through the curve analysis, so got to readjust that. I might as well just delete that. And then same thing. Yeah, too expensive. We're hitting into some supply. I just need some retracements. And S&P is not even on the bullish list anyway. God dang it. Why is my chart not showing? I like my candle over there. I need a new candle because I tried lighting this thing, and I have big hands. I couldn't get my lighter up in there. It's melted away. I got to get a new candle. I just like the light. I ain't worried about all the foo-fooiness. I just like the light. Let's see here. So yeah, nothing. There's not really a play on the indices at the moment. I just need a retracement on both of the ones I'm watching, and preferably I'd like to see the options market turn around and start shorting this stuff because again, I've got a high call volume right now, so not really getting that contrarian signal. Okay, what else do we want to look at? Is there anything else you guys were super interested in? Here in about 6 minutes, we do have CPI coming out. So for CPI, okay, I'm interested in it because I'm interested to see if it strengthens our USD play. Or I'm sorry, our New Zealand USD play. I do want to take a look at that chart real quick, New Zealand dollar, because this is one of my alerts. Yeah. See, we're kind of rolling around the top and going back to the downside. Now, I've got a bullish signal on this thing. I got to say, though, my favorite play is still going to be this 2-hour demand zone. Way back here that I went over yesterday. Right here. That's going to be a point of interest for me personally. Now, I feel like it's kind of fighting the lower low, lower high theme that we got going on. But there's no denying the volume there. And there's no denying that a couple candles and it broke this double top over here. And then it went on to create soon after another zone confluence. So let's see here, guys. Reset this. So I kind of drew it up. Now we've bounced into these overhead supply zones. I expect this. I expect it to hit and go down. Okay. I expected that. And now we come down. We've got a 1-hour demand zone just here. So I would expect price to come down and bounce off of it, but then ultimately go back down and hopefully catch a bid down here at that demand zone, that 2-hour demand zone I was just looking at. Same thing. I drew this up yesterday. Same thing. I got to have a break of structure. I have to have a break of structure, retrace the new demand zone, because if you look at it, is it not starting to give me some lower low, lower high vibes? I think so. Looks like it to me. All right. But I would think, but if it retraces and goes back to the upside, if we can get a fundamental sentiment boost, okay, if that stuff starts kicking in, then that would be a good place to buy. So ultimately, for this play to work out, I would really like to see, lower inflation, because lower inflation would mean on this inflation report. Lower CPI would mean weaker dollar as far as the currency, which would strengthen this potential play. Now I say that, you would think weaker dollar, it would just go straight up, right? Well, yeah, but you guys, these things are irrational at times. Sometimes it takes a minute to kick in, okay, depending on how the market gets on it. So, yeah, I would love to see a weaker dollar. A weaker inflation number, just, selfishly, I guess you could say, but then have price drop into this demand zone so that I could lift off to the top, lift off to the upside. So that's what I would like to see. But yeah, and not only that, it would help our pocketbooks here. Okay. So anyway, that's New Zealand dollar. I am still in Aussie dollar. Looks like it is trying to roll around. It's about 10 pips away from my take profit. Aussie dollar is, as far as my trailed take profit. And I think what I'll probably do starting tomorrow, guys, is get this up. Oh, wait a minute. Oh, okay. I'm probably just going to log into my bigger challenge account over here, because this is a demo account that I use for showing examples and such. But whenever I have a trade, I often just go straight to my challenge accounts first. And then by the time I get my order in those two challenge accounts I've got, then I get over to this one. And oftentimes the play's already gone, so I don't even get in. So I'll probably just do that. That way I can just flip in and show you my positions easier. Because, yeah, this way, because it won't allow me to get into two trade locker windows. I can only be logged into one account, and there's no way to switch accounts on here, and it's annoying. So anyway, I digress. We got a couple minutes left before the inflation numbers come out. Let's take a look at the dollar yen real quick. Okay, this thing's just going crazy. I mean, we're at some pretty distinct highs. How far back does this go? Pretty damn far back, right? You're talking 1990 highs. Guys, remember, dollar yen is in intervention potential territory. Anytime you get up here to the 159, 160, 161 area, this is where the banks like to manipulate price. Is that right? There's a lot. I'm sure there's probably people up here taking some preemptive shorts. Throw on a couple thousand pip, or maybe a 500 pip, 1,000 pip risk, just to short it down and try to make 2 or 3 units of that. I guarantee you there's probably people up here doing it. Not going to be me, though. But I tell you what, if we start getting up here into this 160.28 area, then you're in a weekly supply zone up here. You see that? Look at this. This is a weekly supply zone. And inside, you see I got a little yellow bar in here. That's a daily supply. So if anybody's going to short this thing, it wouldn't shock me at all, and I wouldn't even hate them for it if they got up here in this 160.30 area and started shorting, start layering into a short, and then just put a stop loss above it, above the distal line of the supply zone. I don't know. It actually sounds kind of appealing, but it just doesn't meet my trading criteria. So anyway, guys, the report's coming out here in just a moment. The inflation numbers. I'm just going to get it over here on my other screen. We've got 10 seconds. Let's watch dollar yen. Let's watch this on a 1 minute time frame. And the report is coming out as we speak. Okay. Big drop down. So we must have had, let's see what we got over here. Okay. Still pending on Forex Factory. Let's see what we got. Woo! We got about a 15 pip drop. Okay, 0.2%. Okay, so core is 0.2 against the forecast of 0.3. So that was a miss. Month over month, nailed it. CPI year over year, nailed it at 2.7. Okay. So you really just had you had two of the three that were met expectations, and then you had one of the three that were a miss, and that was the core CPI number. So that was a 0.2% against a forecast of 0.3. Again, here's our numbers over here, real for you. Okay. And there you go. Let's just get rid of everything else. Okay, so here we go, Tuesday. There you go, CPI. Okay, congratulations, economist. You got the number right. You got the number right. So yeah, let's go back. Negative for the dollar. So is it a surprise to see this thing drop downwards right away? No, not at all. Okay, what's new? What's it doing? See, this is helping my trade out. Thank you. Thank you very much. Okay, remember, guys, I was in this Aussie dollar long, and now what we're doing is trying to break through the rest of this 4-hour supply, and it looks like we may have wicked through it. Holy candle, that's right, Xander. Here we go, guys. Okay, here's Aussie dollar. This is my trade. So look at this. That helped my trade out because remember, I was long this asset. So negative core CPI number, which means negative US dollar reaction, which means bullish Aussie reaction against the dollar. So I like it. I love it. That's giving me about 20-something pips already with my trade. And see, I wasn't worried about it down here because, again, I expected to bounce into this 1-hour demand zone and bounce up, and that's what we did. Now, obviously, at the moment, part of that's aided from the negative core CPI number. So I don't care how I get it, just as long as I get it. Right? So there you go. What about let's go look at gold and silver real quick. I'm sure it's going to be, the same, obviously. So yeah, it's just pushing gold and silver into more all-time highs. Damn it! Right. There you go. Nothing we can do about it. We can't be buying this expensive ass stuff up here. We need some retracements. But it doesn't matter because you're always going to have people break out trading. Which got to be honest, for gold and silver, it hasn't been a horrible play this last year at all. What the horrible play is for the dingbats that keep thinking they can short this market. Because this whole trading chart's just littered with short sellers. Okay, this is a graveyard. Think about this. This is a short seller's graveyard all the way up this chart. So anyway, see what oil's at while I'm over here. Okay. Oil finally trying to break through this downwards dynamic angled supply zone. So we're finally breaking through. Okay. Hey, guess what? When it comes to oil, we've finally broken through this daily 4-hour confluence up here on the supply zone. I like this. This is a very good break of structure. If we're talking higher time frame stuff. Go to a daily. Okay. Again, there's my kind of dynamic support, a dynamic supply zone that I kind of drew, from these wick highs, some of these wick highs down here on the bottom side. I just kind of drew that in just to see what it would look like. And as you can see, the projection tool I drew there, I just basically wanted to see price break through the top side so that we can get a retracement down to some demand zones. And this would make it a little more appealing. This is a longer term play, by the way. Maybe we get down to this 4-hour daily demand zone here for a potential oil buy. I mean, that would be a pretty decent play on oil. Holy candle. Yeah, let's go look at the dollar pairs real quick. So obviously my trade's looking good. Aussie dollar, euro dollar. Yeah, all these are going to look the same. Pound dollar, New Zealand dollar. New Zealand dollar's bouncing into that overhead supply zone from back here. Yeah, let's leave it on a 1-hour for a second. Dollar CAD, all the dollar pairs are going to be down. So there's dollar CAD down. This is back to the 1-hour. We'll just move back to a 1 minute. Dollar Swiss, okay. Dollar yen. Yeah, Dollar weakness. What's Bitcoin doing? Going up? Yeah, I mean, as far as Bitcoin goes, ultimately, I got a daily 4-hour down here, but there's no real play on it. Fundamental sentiment aren't really helping it too much. Not really giving me a good signal to buy or sell it. So it's just pretty well neutral. So not really interested in Bitcoin at the moment. Yeah, same thing, guys. I'm just going to continue sitting on my hands and just see what kind of goodies we get out of this Aussie dollar. I've got about 20 minutes. Do you guys, Xander, do you guys have anything else you'd like me to look at? Any other assets at all? It could be stocks even. Okay. I know I haven't exactly advertised the stocks, but now that I'm out on my own, okay, I can flip on over to my stock box over here and take a look at some stocks as well. Because my trading platform does come with, and now this is Ola Prime. So if you ever get an Ola Prime challenge account, just in case you guys don't know this, okay, there's actually some US shares in here. So there's like 25 stocks in here that you can trade. So I wasn't sure if you guys knew that or not. And I didn't even know it until I got an account with them. Okay, this is even after I been working there for a while. But yeah, Trade Locker, this is if you get Trade Locker specifically. It comes with some of your top large cap stocks. Okay? Apple, Amazon, okay? Cisco, Google, Meta. Okay, it comes with all the big ones. The only ones I wished it had is it does not have, what is it, NVIDIA. So it's got 6 of your 7 Mag 7s. You guys remember Coach Darrell and the gang doing the Mag 7 madness, right? So this comes with 6 of the 7 Mag 7s. Got to buy on Bitcoin on Saturday. Got like 5 pips away from my stop loss, and I shot Monday. Shot up, shot in your favor. Go back to that. Is that what you meant, Xander? You got close to your stop loss, it reversed and went back in your favor? Ow. Just smashed my elbow. You said Saturday. Look at Saturday over here. I'm assuming that's what you meant. Yeah. That's Friday. Saturday. Yeah, correct. There you go. Did you buy off demand zone, or I can't remember, Xander, how you trade? Do you trade supply and demand? Do you trade a different way? Let's take a look. Yeah, I mean, if we're looking at the scoring on Bitcoin, again, it is neutral, but let's go just for the hell of it, take a look at Bitcoin. Let's see here. Bitcoin is, yeah, so it's 0. So not really getting any help at all from the technical side of things. You're getting it's basically a 0. Supply and demand, okay, yeah. Is that a 1-hour time frame that you bought off of, or just looking to see what demand zone you were talking about? 30-minute. If you bought on Saturday, it would have had to have been up in here somewhere. Take a look. But either way, it went in your favor. That's all that matters. Hey, and you know what's funny, Xander? My biggest trade of 2025 was just a little over $5,000. Just a little over $5,000. There were 2 times where where price came within like a couple pips of my stop loss before shooting up. Now, the first time was early on in the trade when I was still trying to get up to I don't know, 2-to-1 at that point. But it came back down, and that was the trade of the year, not just because of the money that I made on or not just because of the size of the win, not because of that at all. That was my trade of the year because of how I turned into a scalper and trailed my stop manually for like 2 hours at one point. And a couple times, again, it just barely missed my trailing stop, and then before lifting off into outer space. So It was actually, I was actually pretty proud of myself just because of that. Again, it wasn't even the size of it. It was just because of how I perfectly trail stopped it on the way up to lock in those gains. So no, it was good stuff. It was a lot of fun. What else do we want to look at? Let's go look at our top set. I need to do something on my screen real quick. I need to unshare it just for a second because I mistakenly, I want to share the full screen, the window. There we go. That's what I wanted to do. That's exactly what I meant to do right there. Come on. Okay. So that way I can flip between charts and not have to manually do it. So, all right. So let's go. Let's go back. Get rid of my neutrals. Now this will update here pretty quick since we've had the inflation number come out. So it might take, I think it usually takes about 30 minutes or something like that before it is, before it's back, updated. Oh, it's already kind of updating pretty quick, I think. Pound Aussie shorts. I want to take a look at that. Pound Aussie short, because that's the only bearish asset I have. Okay. What have I got over here? Well, I got a daily 4-hour supply zone up here, which I love. Look at this. I love this zone up here. Well, I strongly like. I don't want to say I love it. Okay. You don't ever want to fall in love with anything in trading. Okay. Just give it the side eye, the hey, excuse me, miss type of a look. Okay. Don't ever want to marry anything. You just want to short-term date these zones. Okay. But anyway, what I like about this supply zone up here is the fact that I've got some liquidity. That's this green box I drew up. Okay, there's some buy orders in here. I know that because of this double, triple, quadruple type top. You had a topping action here, topping action here, here, and here. So all these shorts that pushed price down, think about it. Where's their stop losses? Well, they have to be up in here. Now, who knows how big this range is for their stop losses? But that's buy orders, is it not? It's buy orders. So you got buy orders up there that I think would act as some pretty good fuel for the big banks if they get a hold of it to short this market. I love it because they've got their buy orders to fuel their shorts. There's also potential unfilled orders from the 4-hour and the daily supply zone traders. Okay. And the banks that are up there looking at it. But most importantly, the liquidity. I love this. Oh, I love this. Okay, they gotta get their liquidity somewhere. So I think that could be a pretty good spot right here, just like I drew in the red with the red projection line. Okay, this is exactly what I'm looking for. Yes, there is a supply zone very near to where we're at, but this is just nothing but Chop City to the left, is it not? Is this nothing but just chop? That looks pretty choppy to me. Right? That's just Chop City right there. So Chop City, yeah, you have a supply zone, but it is diddling in the middle, and I prefer a premium if I'm going to be shorting this thing. I don't want to sell my car for $20,140. I want to sell it for $20,240. Okay. Now, obviously, the numbers would be different, but I'm just going by the numbers over here on the pane. I want to sell it and make a premium. Right? So that's my play for the only bearish asset that I'm tracking right now. And that, again, is the pound Aussie. And that makes sense because the pound, again, is missing all of its expectations. It's just hideous. Right? Pound, remember the UK over here, 0, missed all of its expectations. Meanwhile, what do we got for the Aussie? Okay, it's 57%. So it's been exceeded expectations on just barely over half of its reporting. So that's some relative Aussie strength. So it's no surprise that that's on my bearish list here. Okay, I got 15 minutes left. So just a reminder, you guys, I'll be on Trader Nick's page. Okay, I'm gonna hop onto his live stream over here. So just if you would, make sure you copy or save or subscribe to Trader Nick, and then you'll be able to find our live stream right here for the 13th. Again, I'll be on at 8:30. So he's on. He'll be on. I believe he's on already. Let me just refresh that screen. Yeah. So he should be on already. Yeah, live. Okay. Got 460 watching. So yeah, he's on now, but I'll be popping in the background. Again, it'll be 45 minutes from now, just so you guys know. Okay. Really cool guy. He's got 520,000 subscribers on his channel. He's been doing this thing for a hot minute, the stream, for a handful of years now. I've been following this guy for, at least 3 or 4 years. And it all started from sentiment analysis. It all started from the retail sentiment, because he actually, on his tool, on the Edge Finder, he actually used to have this tool for free. Not this whole tool, but I'm specifically talking about the sentiment analysis reading. So the crowd sentiment, the retail sentiment. Okay. This is the whole reason I even found out who this guy was because I wanted to see where the average retail trader was positioned in their trades so that I could use it as a contrarian signal. Okay. So this, and I think it even still is, might be offered for free. So obviously you pay to get everything unlocked, but you know how people do it. They give you some free items first, give you a little taste of it, right? So this was my taste, because I wanted to see what the major and the minor Forex pairs were looking like as far as where the average retail trader was. Oh, look, dollar Swiss. The average retail trader is 82% net long, right? So I would look at this as a contrarian signal. If everybody's buying, I'm selling. The problem was that was the only indicator I was looking at for a while. Okay. And that's when I got sucked in and started understanding more about the economics of what really moves price, fundamentals, and then sentiment when we're talking the COT report. Cheers, Xander. My nose is itching. Have a good one, brother. But anyway, yeah, good stuff, guys. So anyway, if you are able to, definitely stay tuned for that. If not, then I'll be back at 6:30 a.m. tomorrow, same time, same place, Monday through Friday, guys. I'm here for you guys. So anyway, we do have just a couple minutes left. Let's see here. Any other last minute thoughts from you guys, or any questions about any currency pairs or anything? New Zealand CAD, Euro CAD. Let's take a look at a couple of these real quick before we get out of here. Euro CAD. Okay, this is a bullish signal. I do have an alert set right here. This is a 4-hour demand zone. If I skip down to a 1 hour, actually, I think that's a 30-minute. Yeah. So I am looking at this 30-minute candle over here as a potential place to buy. So it's a 30-minute 4-hour confluence. Okay. You can see up here, we did bounce into a demand zone kind of late in the evening yesterday, but I did not want to buy it. Just wanted to see what the reaction was to it. And I didn't like the initial reaction. So I just let it go. And I'm glad I did, because as you can see, it just pierced right through the rest of it. Plus, it's expensive up here. It's a little pricey. So I'm more interested in this discount down here. So that's Euro Canada dollar. Okay, that's the play I'm looking at for that. I need to go to my email. Okay. Okay. So anyway, so yeah, that's Euro CAD. Let's look at New Zealand CAD real quick, since that's a bullish item as well. Okay. So I got a zone here. Now this is a little bit smaller of a time frame. This is a 15-minute demand I've got over here. Look at all this volume spread analysis activity over here. That's awesome. This is really good in the formation of zones. I like that. So what happened? Well, price consolidated and went up and broke all these structures along the way, and it broke through a former resistance support line, higher time frame. That's that blue dash line. We broke these structures up here, and that's where we're currently at. So, higher time frame. Let me just go back to a 1 hour. I mean, this is essentially the play I'm looking for. Return to demand zone, buy to the long side. Simple as that. Okay. So that's that on the New Zealand CAD. Nothing, I don't really like it, the idea of trading anything in this area here. There's a lot of wicks, a lot of indecision candles right here. So I just don't like it, guys. I'm going to wait for the discount, the bigger discount. It got kind of lazy as well when you flip down to some smaller time frames. So yeah, not interested at all. We're going to stick to this. We're going to stick to this 15, 30-minute demand zone in here. Let's see here. There was another demand zone down below, but it did get touched already. So it's mitigated. I'm not interested in it. And I think that was it on that. Guys, tomorrow, as far as red folder events, we do have PPI and retail sales numbers coming out for the dollar. That's the only red folder events. So you got the core and the regular numbers for that, by the way. And let's see, PPI, retail sales. Let's take a look at the numbers real quick. Where are we at? So PPI. So this is the gauge. Let's add some more time into this. Okay. So obviously, again, guys, coronavirus period, this thing was just sky high. It was over 10%. Finally got some reprieve there within that next year. Down to, it's kind of like the inflation report, the CPI, where it was really high. Then we had a sharp decline, and we're just kind of in that slow, steady grind, a little bit downwards on the CPI. But in this case, on the PPI, it's just ever so slightly on the incline. But we are pretty close to that target range. We are actually at the target. Actually, it's the same thing because the CPI, remember, it just came out 2.7%. So that's the same with the PPI. It's just the trajectory looks a little different. This one, you could squint your eyes sideways and argue with yourself and say it's slightly up, whereas the CPI is slightly down. So anyway, that's where we stand for that. Again, the PPI is, let's see here. Let me just go look over here. Yeah, anyway, that's the year-over-year number. But as far as the other number, we had the retail sales number. So let's go to, where's it at? Retail sales, there we are. Same thing. Just going to push this out a little bit. No, that's not what I want to do. I want to go this way. I don't want to go months. I want to go years. There we go. That looks a little better. Okay, retail sales. So, yeah, forecast in was that 0.10? 0.5. 0.5, 0.4 on the core number. Okay, anyway, guys, I'm about to get out of here in just a minute. So let me just double check. Again, I got my stream with Nick here in about 30 minutes. So I need to actually hop off because I got to reply to him real quick. But yeah, just to finish off. So that's what we're going to be looking for tomorrow: retail sales and PPI numbers. We'll look and see how my trade is doing over here on Aussie dollar, if I'm still in it or not. And it looks like we may have retraced all that. Yeah. So there you go, guys. So we've retraced that big spike up on the dollar, okay, the Aussie dollar. So we're still up. We're still in the profit, the unrealized profits. And again, no matter what happens, I'm going to make money off this trade. I've already moved my stop loss up. So anyway, guys, I need to hop off of here just a couple minutes early. With that, thanks for showing up. Thanks for chatting with me along the morning here. I'll be back the same time tomorrow. But again, I'll be on here in 30 minutes over on Trader Nick's channel. So once again, that's going to be at Trader Nick. Okay, at Trader Nick, just like you see here. So yeah, come on, click on the live, and I'll see you guys soon. Have a good day.